Welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today I want to take you on a journey that will fundamentally change how you look at financial markets. This episode is about macro investing, and more specifically, global macro investing explained in a way that actually makes sense if you're new to trading or investing. Because here's the truth: markets don't move randomly. They move because of forces that operate at a much higher level than individual stocks or single headlines. And once you start to see those forces clearly, market behavior becomes far less mysterious. If you've ever watched markets spike or crash after an inflation report, a central bank announcement, or a geopolitical event and thought, why did that happen so fast? You were watching macro forces in action. Global macro investing is about understanding those forces. At its core, global macro investing explained means making decisions based on the big picture. It's about economics, policy, and global trends that influence entire markets across countries and asset classes. Instead of focusing on whether one company beats earnings, macro investors focus on whether inflation is rising, whether interest rates are tightening, whether growth is accelerating or slowing, and where capital is flowing around the world. Macro investing starts with the question, what's happening in the global economy? And only then asks, how do markets respond to that? That shift in perspective is powerful. Traditional investing often looks inward. It looks at balance sheets, valuations, and company-specific news. Macro investing looks outward. It looks at central banks, governments, economic cycles, and global relationships. It assumes that no market exists in isolation and that money always moves with incentives. One of the first things macro investors learn is that economic data matters, but context matters even more. Inflation numbers, employment reports, and GDP data aren't just statistics. They are signals. They tell us whether an economy is overheating or cooling, whether consumers are under pressure, and whether policymakers are likely to intervene. But here's where beginners often get confused. Good data isn't always good for markets, and bad data isn't always bad. A strong jobs report can push markets higher in one environment and lower in another, depending on how it affects interest rate expectations. That's why macro investing explained properly always includes central banks. Central banks sit at the center of the macro universe. Interest rates, liquidity, and monetary policy shape almost every asset class. When central banks raise rates, borrowing becomes more expensive, liquidity tightens, and asset prices often come under pressure. When central banks cut rates or inject liquidity, risk assets tend to benefit. Macro investors don't just watch what central banks do. They listen carefully to what they say, how they say it, and what they imply about the future. A single sentence in a policy statement can move currencies, bonds, stocks, and commodities all at once. That's not exaggeration. That's macro reality. Alongside monetary policy, fiscal policy plays a huge role. Government spending, taxation, and budget deficits shape growth and inflation over time. Large stimulus programs can support economies but may also create inflationary pressure. Tight fiscal policy can stabilize debt but slow growth. Macro investors track elections, political shifts, and policy announcements because these decisions ripple through markets long after the headlines fade. Now, one of the most appealing aspects of global macro investing is flexibility. Macro investors aren't locked into one market. They can trade equities, bonds, currencies, commodities, and derivatives depending on where opportunities appear. In equities, macro investors often focus on entire indices or regions rather than individual companies. In bonds, they analyze yield curves, interest rate expectations, and inflation-adjusted returns. In currency markets, they look at differences in growth, inflation, and policy between countries. And in commodities, they focus on supply and demand dynamics, geopolitical risks, and inflation trends. This ability to express a macro view across different markets is what makes macro investing so adaptable. To bring this to life, imagine a world where inflation is rising quickly and central banks are forced to hike rates aggressively. In that environment, bonds may fall, equity valuations may compress, and currencies with higher interest rates may strengthen. Now imagine the opposite scenario, where growth is slowing, inflation is easing, and central banks pivot toward rate cuts. Bonds may rally, risk assets may recover, and growth sensitive markets may outperform. Macro investing connects those economic narratives to real trades. This is why learning global macro investing explained is valuable even if you never place a macro trade yourself. It gives you context. It helps you understand why markets behave the way they do. It reduces emotional reactions and replaces them with structured thinking. But understanding is only part of the equation. Tools matter too. If you want to apply macro ideas in real markets, you need access to multiple asset classes, real-time data, and reliable execution. Using a world-class, cutting-edge, user-friendly trading platform app can dramatically improve how effectively you turn macro insights into action. A platform that lets you analyze global markets, monitor economic trends, manage risk, and trade efficiently from one place isn't a luxury. It's a necessity if you're serious about trading with a macro perspective. If you're looking for that kind of experience, take a moment to explore crystalballmarkets.com/platform. That's crystalballmarkets.com/platform. It's built for traders who want professional grade capability without unnecessary complexity. Education is just as important as execution. Macro investing isn't something you master quickly. It's learned through repetition, observation, and continuous exposure to how markets respond to economic forces. One of the best ways to build that understanding is through consistent, accessible learning. If you're searching for beginner-friendly trading, investing, macro, and financial markets podcasts, I strongly recommend visiting iss.com/podcast/crystalballmarkets. That's iss.com/podcast/crystalballmarkets. These podcasts are designed to make complex macro concepts understandable and practical, especially if you're still building your foundation. As you start developing a macro mindset, keep things simple. Follow major economic releases. Pay attention to central bank decisions. Ask yourself how changes in inflation, interest rates, and growth might affect different markets. Write down your views. Track how markets respond. Learn from what works and what doesn't. And above all, respect risk. Macro investing involves uncertainty. Economic forecasts can be wrong. Data can surprise. Policies can change. The goal isn't to predict the future perfectly. The goal is to manage risk intelligently so that mistakes don't take you out of the game. Avoid excessive leverage, especially early on. Diversify across ideas. Know when to step back. Many beginners make the mistake of reacting to every headline or trading without a clear macro thesis. Others ignore central bank signals or assume they need to be right all the time. They don't. Macro investing is about probabilities, not certainty. So, is global macro investing right for you? If you're curious about how the world works, how economics shapes markets, and how capital flows across borders, then macro thinking will resonate deeply with you. Even if you're primarily a long-term investor, understanding macro forces will improve your timing, allocation, and confidence. Macro investing helps you step back from noise and focus on what truly matters. It's not about chasing trades. It's about understanding environments. And once you see markets through that lens, you never really go back. If you're ready to take that next step, remember you can explore a powerful, user-friendly trading platform at crystalballmarkets.com/platform, and you can continue building your macro knowledge through beginner-friendly podcasts at iss.com/podcast/crystalballmarkets. Thank you for spending this time with me on Financial Market Insights for Traders. I'm Sophia, and I'll be with you again in the next episode.